Hello friends, welcome back to my channel. This is Abhijit Roy. Those who don't know me, myself Abhijit Roy. I'm an ex-banker of 20 years and currently I'm trying to make you all understand financial thing in a very layman language. So without further delay, I will just speak today about portfolio turnover ratio. How does it help you? How you can watch all these things, and that is very critical, right? So without wasting your time, we'll just straight go to the functions where you can find the same. So portfolio turnover ratio, if you find what is this portfolio turnover ratio, is nothing but a measure used in finance to evaluate the trading activity within an investment portfolio. It is calculated rather by taking the lesser of the total purchase or sales of securities in the portfolio or the mutual fund over a specific period and dividing it by the average net asset value, or the NAV as we normally call, of the portfolio during that period. So the formula is very simple. It is portfolio turnover ratio is equal to lesser of the total purchase or sales average net asset value into 100. Right. What is this total purchase or sales? This includes the total value of securities bought or sold within the portfolio during a specific period. Right. Maybe from April to June, or maybe the last quarter, something like that. Average net asset value, this is the average value of the portfolio over the same period, calculated by the beginning and ending NAV for each period and dividing by 12. A higher turnover ratio indicates a more actively managed portfolio with more frequently buying and selling of securities. On the other hand, a lower turnover ratio suggests a more passive approach with fewer changes in the portfolio. So investor often considers the turnover ratio when assessing the cost associated with the managing a portfolio. Higher the turnover ratio typically results in higher transaction cost and may lead to tax implications for taxable accounts. Therefore, investors should be aware of the turnover ratio and its potential impact on the overall performance and cost effectiveness of their investment strategy. Now, for example, if you take ABCD is a fund, right? So ABCD fund has bought stocks worth 800 crore and sold stocks worth 900 crore over the last year. Maybe the fund's AUM size is around 1600 crore. So the minimum stock, if you find it's 800 crore, divided by 1600, that is the total AUM size of this stock, which is into 100, which comes to 50%. So you have to understand how does this work, right? So now we will go straight to how you should be able to find this one, portfolio turnover stocks. If we come to any of this one, I'm taking care of this one, moneycontrol.com. Suppose I'm seeing, just for an example, I'm just having this one, GEM large cap funds. Out here, if you come down, you will definitely find something known as portfolio turnover ratio, which is 180%. 0.57. The category average turnover ratio is 122.90. Right. So you have to very much clearly know that what is the portfolio turnover ratio, so that you can earn more. I hope this sort of video will be liked by you all. In case you like this video, do like, share and comment on my channel. Thanks a lot.